Hello and welcome back to Effortless Investor, the channel where I document a realistic investing journey month by month without the nonsense. Today's video is all about my child's junior stocks and shares ISA for July 2025, currently held with Hargreaves and Lansdowne. I'll be looking at how the portfolio performed this month, what it's actually invested in, and whether it's beating the market, using a global all cap as a benchmark and also comparing the performance to the S&P 500 and FTSE 100 indexes. Let's get into it. The only fund the portfolio holds is the iShares Developed World Index, i.e. accumulation fund, which tracks large and mid-cap companies across developed markets. It's a globally diversified, low-cost option, which is perfect for a long-term portfolio designed for my child's future. Those that viewed last month's update will notice that the fund has changed, and that's for two main reasons. Firstly is the difference in OCF, or fund fees. The benchmark fund had an OCF of 0.23%, whereas the iShares fund has an OCF of 0.12%, so almost half the cost. Secondly, I compared the 1-year, 3-year and 5-year returns for both funds, along with several other world funds. The iShares fund significantly outperformed the benchmark fund at each level by 1.2%, 7.4% and 11.65% respectively, making it a no-brainer for me to switch funds. As of the end of July 2025, the junior ISA is valued at £132.29, which gives me a total unrealised profit of £3.41, or 2.65%. If we have a look here at my investment tracker sheet, you can see that I am up a total of 6.54%. which is only just below my target of 7% average annual returns after just 2 months. But was that a wise decision to change funds? How did it perform compared to the benchmark and the markets? I use the Vanguard FTSE Global All Cap Index Accumulation as the benchmark fund. It's broader because it includes emerging markets and small caps, but it's still a fair reference point. So, in July 2025, the iShares Developed World Index returned a gain of 5.1%. Meanwhile, the Vanguard Global All Cap Index returned a gain of 5%. That means the junior ISA is currently slightly ahead of the benchmark by about 0.1%. But how does it compare to the S&P 500 and FTSE 100 indexes? Starting with the ever-popular S&P 500, we can see from this graph that the total increase for the month of July is 0.13%. Not a great month for the S&P 500. In comparison, the FTSE 100 index gained 3.06%. But remember, this is just 1 month. The long game is what really counts. So, in short, did my GISA beat the market in July 2025? Yes, it did, beating both the S&P 500 indexes and the FTSE 100 comfortably, whilst also marginally beating the benchmark fund. Moving on now to the strategy. This month I added another £25 to the junior ISA. Nothing fancy, just a steady contribution. This account is all about compound growth over time. So rather than timing the market, I just make sure I'm consistently investing. It's a super simple buy and hold strategy, and honestly, it's what I love about it. No need to pick stocks, no chasing trends, just simple, effortless investing. Since starting the junior ISA, the portfolio has grown by 6.54%, which I think is a solid return considering the market volatility we've seen over the past 6 months. My goal here isn't to double the money in a year, it's to give my child a financial head start by the time they turn 18. I have the benchmark for the average yearly return at 7%, which I'm almost hitting after just 2 months. And if that means sticking with a diversified global fund and letting time do the heavy lifting, I'm all in. So to recap, is my junior ISA beating the market? This month, yes. Let me know in the comments, do you invest in a junior ISA or are you thinking about starting one? If you found this video helpful, don't forget to like, subscribe and tap the notification bell so you don't miss next month's update, including my main stocks and shares ISA too. Thanks for watching, and as always, keep it simple, keep it realistic, and keep it effortless.